Well, the point of this slide is to emphasize some of the structural reasons why we have these problems, and to emphasize the existence kind of in the middle of it of a bit of a whole industry. We usually often talk about offshore havens and tax havens and unregulated, sort of structures across the globe as separate jurisdictions. Gudrun's presentation, I think, begins to get us a good example of where these boundaries kind of dissolve under the influence of international players, not only banks, but also players like accounting firms, law firms, some of the firms that are involved heavily across borders in not only operating the day-to-day sort of financial system, but also helping to influence policy across borders. And you see again and again over a prolonged period of time when forces of deregulation, of tax manipulation, and of odious finance are just part of the result of all that. So we've talked about there being at least 6 or 7 different components of this global haven industry, of the pathologies enabled by the global haven industry. Odious finance refers to the kind of bad banking example we just talked about. Also includes the phenomenon of odious privatizations. Private banking, pirate banking refers to the role that major players play in stashing offshore wealth, protecting it from taxation and regulation, and setting the rules that enable that. There's multinational tax dodging. Christian has presented quite a bit of information about that, Thomas as well in the first session that you saw. Transnational crime, money laundering, contraband, this is all, and also the problem of remittances from immigrants that are underreported and are often heavily penalized by the recipients countries. And climate crisis is another phenomenon that we've seen a lot of corporate impunity. And finally, the hacking of democracy, the phenomenon where as we've just seen in the case of Iceland, policymakers were heavily influenced by private sector interests to deregulate and to permit shady practices. This all comes to life. I mean, I think what we're talking about is an industry that shares certain facilities. It's sort of like the Star Wars bar scene where you see all these different kinds of misbehavior sitting around the same bar, and they share the same kind of access to financial secrecy, to weak regulation and taxation, to this enormous international industry of enablers, bankers, lawyers, and accountants. And basically, on the other side, they're also taking advantage of the fact that we have, in many countries, still have the rule of law, so that they can count on the court system and independent judiciaries to protect their hard-won loot once they've gotten it, and to be too big to jail. So it's not just tax havens, it's not just money laundering centers. We're talking about a whole system that facilitates all of these kinds of behaviors. I think it all comes to life in the set of cases that we'll talk about briefly here, but here's a few generalizations. We've seen this rise as kind of human construction since the 1970s. It isn't something that's always been with us, and it arose for very specific reasons. We've had private banking and secret bank secrecy back to the 16th century. And there's always been mattress money, but the real spurt of the industry got going in the late 1970s, and that was, I'll talk about some of the factors responsible for that. At the time I started studying this, back then there were about 10 to 15 offshore havens of any value. Today there's more than 133, and there are new players like Kenya trying to get into the business every day. It's become a kind of commodity to offer offshore banking and bank secrecy. There's been some success in the last decade as organizations like Tax Justice Network have gone to bat resisting this, toward having improved transparency and more reporting requirements. But the industry is larger than ever. It is, it's fighting its corner very effectively. And so there's a long way to go before we're, can really put an end to this offshore industry. And in fact, it has moved onshore. We now have 33 states in the United States that are offering asset protection trusts. 49 states offering LLCs. They just passed a regulation providing for beneficial ownership declarations on those companies, but the data is only available to law enforcement. So there's a lot of evidence that the U.S. itself has become a great big haven. We'll talk about that with pretty first-rate bank secrecy. Worldwide, the odious finance business, you can measure partly by the rise of kleptocracy. For many countries, theft of public assets is more important than tax dodging. On my estimates are that it's at least $14 trillion of offshore wealth from developing countries, mainly from kleptocracies like China and the United States. Pirate banking we referred to is more than $50 trillion of offshore hidden wealth. I'll go into the estimation methodology for that, invite you to participate in that debate. I've been heavily involved in it for the last decade. Most of that is owned by the top 0.1% of people on the planet, so it is contributing to inequality. It's basically left out of a lot of the wealth distribution statistics that we're used to. And it's facilitated by what I call a bankster crime wave. We've documented something like 700 very serious offenses by the top 22 banks. As in the case of Iceland, some of these banks, have paid heavy fines, but unlike Iceland, almost none of the executives have been caught. These are all U.S. banks that I'm referring to. Mainly U.S. banks, have gone to jail or done any jail time. They have paid several hundred billions in fines. Multinational tax dodging, depending on your estimates, is $300 to $500 billion a year of lost revenue. And basically, we've seen the decline of the corporate income tax. It's about 7% of U.S. federal tax revenues at the moment. It's even lower in Europe. There's a lot of schemes to try to restore the corporate income tax on an international scale, proposals for minimum corporate income taxes. Those are actively under consideration. I'm sure the Biden administration will try to do some of that. But the real story is that over the last 30 years, the corporate income tax has been decimated on a global scale. And I really doubt that we're ever going to be able to use that as a serious corporate vehicle, as a vehicle for progressivity again. Human capital flight, if we measure it by the sheer scale of international remittances, remittances are now about $750 billion a year. Cross-border remittances, it's about 4 times of all aid. Much of that being sent by some of the poorest people on the planet, hardest working people on the planet across borders, and being subjected to very high transfer costs. One of the issues we'll talk about in a couple of weeks when David Lighten presents is how we can actually tackle that problem and help to save a lot of those transfer pricing costs. And then the problem of state capture representation without taxation, I call it. Sort of the emergence of really a transnational class of people who are beyond the reach of regulation or taxation in the last 20 years. So the argument here, and I think that's, the fine sort of hypothesis I'm arguing is a lot of the inequality we're talking about is man-made, person-made, and it's something that we can do something about. but it actually threatens democratic capitalism directly. So the Panama Papers, 2016, if you remember any of that, it was a tremendous revelation. We had a Panama law firm that turned out to have about 200,000 companies. We got a window into their clients around the planet. They've been selling secrecy companies in many jurisdictions, most of which were in Caribbean, but a large number from British Virgin Islands. But they've been selling them to about 500 banks around the world. And the clients involved, who are basically parking their money in these companies, were many heads of state, quite a few public officials, like the Iceland case we saw, the use of the offshore. But this is just one of 2,000 Panamanian law firms. And Panama itself sits on the edge of the global haven industry. If this had been a Swiss law firm, we would have had 20 times the number of offshore companies disclosed. So that, one leak from Panama Papers showed the power of whistleblowers, but it also demonstrated, in a sense, how far we have to go in terms of investigative journalism. Gudrun mentioned the Iceland case. When I went to Iceland, one of the first things they did was to look at all of these incredible interrelationships among the banks and the financial institutions. And I got involved in looking very closely at one of them because I was interested in Trump's offshore financing. And it turned out that, oddly enough, Donald Trump had received something like $50 million from an Iceland equity firm called FLG Group. And I thought, that's odd. What's that's about? Well, it turns out that the offshore side of the Iceland story to this day, is not described in this rat's nest. Because a lot of the most interesting relationships disappeared into offshore havens like Luxembourg, where the private banking side of the offshore portfolio was put off limits and then quickly sold off to another private banking institution in license. So we never really got to understand that. But FL Group turned out to be a big player in Iceland, and it had a lot of Russian money involved in rolling through it, totally underregulated. And it was no coincidence that it ended up in helping former president finance one of his largest real estate projects in New York and several others. I put a link in the chat to a couple articles about this. One goes into the Iceland connection with Trump in some detail as of November 2016 when we published it. And then there's a new article that we talked about, the latest revelations with respect to Trump, that we just published with David K. Johnston this week. The gift that keeps on giving. Unfortunately, the Mueller investigation skipped over all this for reasons that we go into in that article. But there's still hope that some U.S. prosecutor will look at all these connections. So you've talked a lot about bananas. I guess Christian talked a little bit about the banana industry. I was going to give you another concrete example of the global haven industry here, just to cement it in your mind, because I think a lot of this stuff comes to life when you in the context of very concrete examples. And here's the case of the banana industry, where we have Chiquita banana, in this case exporting from Ecuador for an export price of 20 cents a pound. They do pay in Ecuador a tax of 1.5. This is data as of 2007 when we did this case, by the way. So it needs to be updated. They paid $0.015 of taxable profits in Ecuador based on the export tax. They have a Cayman Islands captive subsidiary, which charged the parent company 12 cents a pound for the use of the purchasing network, subsidiary owned by Chiquita. They have a Luxembourg subsidiary for finance, which charged another small amount per pound. Up to, I can't really see that on my screen. I've got the color bar here. There we go. Ireland, 6 cents per pound for the use of the brand. Oops. And a Jersey subsidiary charging 6p for management. The Bermuda subsidiary charging 26 cents a pound for the use of the distribution network. These are all deductions from what turns out to be the retail price in the UK of 59 cents a pound at that point, the import pound. You know, so basically at the end of the day, the invisible hand here, which is the premise on which the international transfer pricing system is based for purposes of corporate taxation, is basically nowhere to be seen. These are not arm's length transactions. There's no competitor bidding for the right to, you know, sell the purchasing network to Chiquita. These are transfer prices that are arrived at, you know, and there's an enormous industry in the accounting professions, you know, that basically spend time justifying these transfer prices in the case of an audit to the IRS. But imagine a developing country that's trying to audit such a network, you know, and sending, having to send people to these islands or to understand whether these are really competitive prices that are being used for purposes of transfer pricing. That's a good illustration of just one aspect of the global haven industry, which is the nature of multinational tax abuse. I've spent far too much time in this industry. When I started writing about it, the first article I wrote was about, you know, where all the money is that's offshore, basically. You know, we noticed the fact that there was a huge demand for $100 bills that could not be accounted for by the volume of US retail need for $100 bills. And I proposed a cash recall. That was way back in 1976. Larry Summers, my Harvard classmate, finally caught up with me in 2014 when he said, gee, that's not a bad idea. Let's recall the big bills. Meanwhile, he had been Treasury Secretary and had the power to do so. But it turns out that something like today, there's roughly $2.5 billion of large bills greater than 500 euro notes, 200 euro notes, or $100 bills. And 80% of them are offshore. You know, when they raided Pablo Escobar in Colombia, they found $1 billion of $100 bills stashed and moldy stashed in his underground facility. Saddam had about 3 billion of $100 bills. But those are just the tip of the iceberg. There's, you know, there has been an enormous demand for secret currency. And I think it was a key component of this bill demand. Noticing that fact led to a lot of interest on the part of the Federal Reserve, and you know, the U.S. Treasury got involved and started issuing regulations on transferring currency into banks, and so they installed a $10,000 limit, a reporting requirement to be able to trace some of this. But at the same time, they were never really willing to face up to the fact that most of this was offshore, facilitating all kinds of bogus transactions. And also the fact that in many countries, people were using $100 bills as a substitute for their own currencies as a form of, you know, inexpensive private banking. Anyway, there's a long list of endeavors here in terms of topics, all the way up to the most recent work we did this week on Trump. But it's been a series of what we call investigative economics, concrete examples of going to figure out particular problems by going to the front lines and actually trying to investigate where the money has gone. So I've investigated, done detailed field investigations of far too many kleptocrats, Argentina, looking at where their money went, all the way down to, I'll take you through a couple examples here. Please feel free to direct me. I did do an interesting case recently in Angola where we were helping to find $5 billion that the dictator there had laundered. But there's enormous scope for doing this kind of auditing work, but at the end of the day, you come back again and again to the same conclusion. The problem isn't in Brazil or Haiti or Nicaragua or the Philippines. It's in the global system that we have that helps to facilitate this kind of pattern over and over again. Somebody has their, Keith, I think you have your iPhone on. I'm hearing, if you could please mute.
I'm glad.
Okay, if you could mute.
So I can take the shower and first look.
Yeah, that's helpful. Thank you. Thanks. TJN is an organization I've been involved in since 2004. They did the first really impossible demands with respect to reforming the system in terms of cleaning up the reporting requirements, beneficial ownership registration, country by country reporting. And there's a relatively small group of people, John Christensen, Nick Shaxson, Richard Murphy. Christian has been involved recently. We've been kind of outnumbered in terms of making these impossible demands. But I think it is an example and a good one to remember of the power of simply having the facts on your side and being able to make strong, even embarrassing arguments to power. And that has much more influence than the industries like to admit. Investigative economics is quite a distinct approach to economics. I'm an economist by training. I was chief economist at McKinsey. I spent a lot of time doing orthodox economics with my classmates like Summers and Sachs. And the thing that I'm into here is much more anomaly driven, puzzles driven than it is model driven. So neoclassical economics, for those of you who have training in that approach, you'll start out with some kind of a utility maximizing model, that tells you where to look, and it's based on kind of model driven questions, and you try to test the model by throwing up different data sets against it. It's very much what I would call a behaviorist or positivist approach to the problem. I prefer the approach that C. Wright Mills, who's a great Columbia sociologist, advocated, which is, get up out of the armchair. If you want to know how somebody feels, you can ask them. You don't have to, be a behaviorist and say, you look pretty good today. How am I? And the emphasis is on anomalies. So here's the kind of examples that we look at. As I mentioned, where are the $2.5 trillion of big bills, or the $1.4 trillion of cryptocurrency now, which is also a global addition, or the $7.7 trillion of private gold that's held outside of orthodox vehicles, mattress money, effectively. Compared with the standard money demand models, you really have to look at the underground economy to explain this kind of demand. In contrast to the orthodox Lewis-type savings models of development, where capital just automatically, high savings countries, rich countries end up providing loans and other capital, and it gets invested in developing countries and produces growth. Well, you saw, a tremendous test of that model back in the 70s and 80s and 90s, when the world tossed more than $3.5 trillion of capital at the developing world. And did it produce growth? No, it did not. In fact, many of the countries that had the most capital had growth reversions. The whole illicit flows literature is a kind of another example of kind of orthodoxy. There's an elaborate methodology that's been developed since 2006 by Global Financial Integrity. It's been picked up by the UN and, to some extent by other analysts. It basically kind of begs the basic question of where do the flows go? There's many issues about the methodology itself and the analysis of discrepancy in trade flows, transfer prices. But the fundamental problem with it is it doesn't answer the question about, who's doing this, to whom? What's the industry that's helping to manage these flows? And where do the assets actually go? So there's illicit assets at the end of the flows, and that's what we try to do in estimating the stock of offshore flight wealth. And finally, the issue of corruption, democracy. Traditionally, the theory, the orthodoxy in political science has been to treat corruption as an indigenous problem, to emphasize historical continuity, and sort of certain cultural patterns that certain countries are subject to just because they are who they are. Well, I think the opposite is the truth. It's actually been quite a job maintaining historical continuity on the part of the ruling groups, and that a lot of the influences on the outcomes that we see with respect to development are the result of recurrent interventions from outside and the existence of the external players that enable the amount of corruption repeatedly. And there's far from continuity, there are really interesting tipping points we can point to in terms of development. So it's quite an alternative worldview, which emphasizes looking for anomalies, looking for simple problems, and trying to explain those as compared with the orthodoxy. The other basic principle we have adopted, especially at TJN, has been to try to quantify problems. And over again, we see value in making the effort to quantify the unquantifiable, try to measure the size and growth of the underground economy, try to measure the size and growth of capital flight and capital flight wealth that's accumulated, and trying to, even our latest effort has been to try to estimate the amount of the stock transfer tax in New York State, where we've been rebating money hand over fist to Wall Street for the last 30 years. Turns out Wall Street is not being straightforward about the numbers. That's surprising. But again, I can't emphasize enough this empirical focus, the emphasis to actually quantify can be extraordinarily fruitful. My first effort at the pirate banking story, which is the story of taking money out of developing countries in particular, and parking in offshore havens tax-free, dates back to 1986 when I wrote this cover story for the New Republic, which is highlighting the fact that Citibank, at that time, so supposedly the largest lender to Latin America, had actually constructed a secret organization in its organization. It wasn't in its annual reports, called this private banking group. Many moons ago, and during this article's period, that was a great revelation. Now they're quite proud about their global wealth management team. But at that point, it was off the books. It was the most profitable unit in Citibank. And compared with the $12 billion, which sounds like a small number, but it was the largest lending portfolio to Latin America, that Citibank showed as of 1986 on their books, they had actually taken more than $14 billion out of Latin America in the form of capital flight, parked in offshore havens. And so this was, quite an interesting revelation. Got me in a lot of trouble. Nobody had noticed it before, and it was a clue to a lot more interesting revelations going on. I spent the next basically 2 decades following up on various leads, going to all the countries that I'd started to identify in that book, in that initial article. Another fact that we talked about early on was the America as a tax haven. This is a theme that we have recently seen all over the place, but even back in the late 80s, it had become a fact that the United States actually welcomed so-called non-resident aliens to the US and made their tax lives easy, so that if you stayed in the United States less than 180 days, you could invest here tax-free in capital assets, in stocks and bonds. You were taxable on dividends, but not on capital gains. You were not taxable at all on the interest that you received from banks. And the banks were quite, sort of very much responsible for that particular act of legislation. It was a measure explicitly designed to facilitate the growth of pirate banking in the United States, and it did so. So you had banks like Citibank and JP Morgan, Chase, at that point was independent, Bank of America. All of these became really world-class leaders competing with the Swiss and the UK banks in this industry. On the right, I have a paper that you can find on the web. It's called The Price of Offshore, in which you use a variety of methods to estimate the volumes of all this. But again, it's been a continuing theme song in my work. 2013, there was a cover story for The Economist about our estimates and basically agreeing with those. And there's been a lot more attention to this industry, as we mentioned, the Panama Papers, but quite a few other leaks have come out highlighting, it's almost the banality of exposés has been the problem. The point about this is really fundamental, which is that we've known about this industry and its players and its propensities to facilitate lots of misbehavior of various kinds for decades. And it's really a tribute to the industry and its pervasive influence that it keeps on ticking and expanding right through up to the minute. None of these scandals, they come and go. And the fundamental reforms are very slow to happen. So if you ask the EU for a list of tax havens, this is as of 2018, they came up with a blacklist. They thought their approach to attacking havens around the planet, places that have low regulation, low tax rates, accept a lot of activity from foreigners. They thought their way of attacking havens that would be effective would be to go after players like the names on this list. They started out with a long list of 17 havens, and they blacklisted these players like Namibia and Palau and Panama, Samoa. They whittled that down under protest from some of the bankers involved, and finally came up with a list of 9 jurisdictions that were blacklisted. The final gray list had nobody on it, and as of today, the list doesn't exist. It was quickly driven to nothing. But the main players that were missing from the list were themselves. TJN publishes a detailed analysis of 130 havens today, and each one you can go country by country and find the ranks in terms of their scale, the role they play in financial secrecy, the degree to which anyone is ever penalized for facilitating organized crime or money laundering or bad banking. And by far the most important havens from that standpoint of kind of objective metrics are Switzerland, the US, and the so-called UK spiderweb, which emphasizes the role that the UK has played with lots of so-called independent havens around the planet, like the Cayman Islands, BVI, Guernsey, Hong Kong, Singapore. UK bankers have been deeply involved in the construction of all of those havens. None of these were on the EU list, and that was no accident. The other key havens that are to be highlighted here that are really probably soaring in importance are not only the Asian havens, especially Singapore these days, but also Middle East new havens. The United Arab Emirates is a particular haven of choice now. If you want to acquire residency in the UAE, it's relatively inexpensive. There's no taxes or regulations worth worrying about. That's where Jacob Zuma and his family have, and some of the people financing him, the people around have fled the coup. That's where you can find any number of former African dictators, at least their banking relationships these days. And you also find it as a clearinghouse for stolen gold being exported from African countries. There's just an enormous underground economy in the UAE, but virtually impermeable to Western regulation because of their strong, sort of oil economy and their lack of need to cooperate. You see these other leading havens, Seychelles and Mauritius, that are kind of expanded tremendously. And then the most active European havens that don't get mentioned are Luxembourg, the Netherlands, Malta, Cyprus, Ireland, and I might also mention Latvia, which has recently been sort of a target of some of the investigations with the Danske Bank scandal. Anyway, so there's this fundamental hypocrisy about the EU blacklisting effort, and I think that accounts for one of the reasons why it hasn't gotten much done. So the standard myths that we talk about with respect to offshore havens and offshore industry in general, first of all, I mentioned the fact that it is an old story, not a new one, that we're not just talking about tax havens, we're talking about all the players in the Star Wars bar scene, about kleptocracy, about many other pathologies that are being facilitated. The myth that is offshore, I mentioned the fact that many US states are now involved in providing secrecy services. The US is also the home to many of the enabling institutions, and it has this very attractive, still to this day, this very attractive tax regime with respect to non-resident aliens. The notion that this is legal, as former Chancellor of the Exchequer in the UK, Dennis Healy, once said that the difference between, in this area, the difference between legal and illegal is the width of a prison wall. You see so much room for interpretation in many of the financial regulations, tax codes that we're talking about here. That's what is precisely legal, where and when is really often in the eyes of the beholder, and that many of the law firm and tax firm, if you set out in life to be a tax lawyer and you end up at a leading Wall Street firm, as I did for a brief period of time, you will quickly learn that this is this is a sausage that has to be cooked, and there's enormous scope for playing games with what is legal. It isn't the black letter law kind of situation. A good example is in the accounting profession. One of the major accounting firms had a rule that if there was a 25% chance that their audit practices of a client, particular audit practice adopted by a client was legal, they would say that it was defensible. So this is really kind of a probability determination for many of the financial schemes that we are talking about. I'm going to skip over the modest size here. We'll come back to that question, but I think it's clear to me that it's much larger than many other analysts have thought. And it is something that is often thought to be beyond our control. Actually, there's an enormous number of things, very concrete things that we can do to deconstruct the offshore industry. It's more a question of the political will to do so. I'm going to pause there and take some questions and see if there's any interest in.
Harrison?
Yeah, I have a question. This might be a bit of a stupid question, but what would you say to like the sort of I don't know if it's a natural reaction, but like the reaction to this, that like, what if rather than trying to get tax havens to sort of increase taxes or end tax havens, the other countries took the alternative approach of just massively reducing tax? What would be the like effect of that? Is that it might not be a viable possibility, but that was sort of my reaction to this. It feels like a problem that's hard to solve.
Good question. Any others?
Radian.
Yeah, my question, much of the highlights you gave us from your kleptocracy discussion focused on South America. I'm from the Republic of Moldova, so I was wondering if you had, I guess, any knowledge or any research they've done on the Eastern European side of things. A few years ago, we had like 12% of our GDP disappear from the national bank. And I know you mentioned Latvia, so I was wondering what, I guess, your position on that side of the world was.
All right, let me take the that question first, because we have some slides coming up. Well, I'll talk about the volume of flight capital from Eastern European countries, and Russia and Moldova, I think, is on the list. So yes, it's definitely of great interest. On the question of simply abolishing taxation as a sort of a nirvana approach to this, that is, I don't think, serious response to the problems we face. Somebody has to pay for the essential costs of public services, and the issue comes down to kind of, is it the poor? Is it the middle class? Well, that has definitely been the trend in many developing countries, where they've found it difficult to tax, corporations or high net worth individuals who have much more mobility, and they've turned to, in fact, regressive taxation as a way to pay for hospitals and roads and education, and it's simply not a very attractive way to solve the burden, the essential burden of public finance. I would say that the other thing is that we've seen here that it's not just about tax burdens; it's also about regulation. It's about being able to control organized crime. There is a whole confluence of players who gather around these unregulated places and take advantage of the rest of the world. So finally, I think that we're actually winning. There's no reason to retreat here. We've had a setback in the United States with the Trump administration, but apart from that, it seems to many of us that Europe and in many parts of the developing world are beginning to understand the need for deconstructing the haven industry. So, if there had been a successful experiments anywhere with limited states, I would have as a path to development, I would be optimistic. But empirically speaking, every major example of a successful developing country, I would include the United States in that description, empirically has required a strong state and substantial tax resources in order to develop. So,
Jim, we are well over time, 16 minutes over. Yeah. So I'm wondering.
Let me end there. I'm just going to conclude with that tea tasting, and if there's demand for more information about anything, we have tons of it. So I could go into the detailed estimates. Here is, while we ask about Moldova, I don't have Moldova on the list here.
Yes, it is. It is on the list.
Oh, it is on the list. There we are. So cumulative capital flight through 2014, Moldova was 2.2 billion. Offshore earnings. Their flight stock was roughly 2.1 billion. Their net debt was almost zero at that point. So, but the flight stock for the whole of the former Soviet Union offshore was on the order of $2 trillion, which made them a net creditor after taking into account their reserves and their external debt. And that's a pattern that we also find with sub-Saharan Africa, and the East Asian regions. So for the developing world as a whole, we have much more flight wealth offshore. So much flight wealth offshore that if you deduct the external debt and the reserves, they are massive net creditors of the first world. So
Good. And this will go up on the Canvas website as soon as I get it from Jim.
yeah, great. Okay.
Good. Then I think we leave it here for today. And thank you all for coming and asking these good questions.